to today's webinar. Apologies for the technical issues we've experienced earlier. I hope these are all fixed now. We'll start again from the beginning. My name is Dennis Flitsch and I lead the Sustainable Blue Economy Finance Initiative at UNFFI. For those who don't know us, we are a partnership between the UN Environment Programme and the private financial sector. So we work with more than 450 banks, insurers, and institutional investors to develop the global sustainable finance agenda. Specifically, we convene a community of practice on sustainable blue finance focused on providing guidance and tools to ensure that investment, underwriting, and lending activities are aligned to the UN SDG 14 Life Below Water. Today, in this interactive session, we want to share and discuss some practical approaches financial institutions have taken to implement blue finance projects on the ground. But I want to start with a bit of background first. Major industries such as shipping, tourism, seafood, and renewable energy rely on a healthy ocean and a healthy flow of finance and insurance to underpin their operations. Banks, insurers, and investors have significant leverage to transform such sectors at pace. We're increasingly seeing financial institutions seek ways to lower their risk exposure to unsustainable ocean practices, as well as supporting ocean businesses in transitioning towards a sustainable blue economy. And the need for such a transition is real. 2021 finally put a number to this urgency. A business-as-usual approach to ocean-linked sectors will leave the world's economy $8.4 trillion out of pocket over the next 15 years. Conversely, swift action on changing our harmful approach to ocean resources will lower this burden significantly. And that's a huge incentive for action. Banks, insurers, and investors have been fast out of the block to launch some exciting new financial products and projects. A couple of examples are the TNC and Swiss Re's coral reef insurance that was put to action supporting the restoration of parts of the Mesoamerican reef. And blue bonds were buzzwords in many financial headlines, including the ADB Blue Bond and the expansion of the Blue Bonds for Conservation program to include Belize. This wave of excitement is also evident in our own work. We've seen membership numbers to the Sustainable Blue Economy Finance Initiative increase by 355% in our first year. Almost 50 players with a total asset size of $11 trillion from private and public finance sectors are considering this topic crucial enough for their business and overall strategy to get involved in our Sustainable Blue Economy Finance Principles, the world's first high-level framework to align capital flows with SDG 14. So things move and seem to move in the right direction. And while we've seen some inspiring innovation from a few pioneers, the scale of the challenge urges a redoubling of global efforts. Several issues are still holding back progress and mainstreaming of ocean finance across the global finance community. And today we want to contribute to addressing one of them, namely the lack of a track record. The ocean finance space is not yet straightforward to navigate. And while the track record of sustainable blue projects is slowly developing, transparency and knowledge sharing across the financial community need to increase. Collaboration between public and private actors especially, alongside further mainstreaming of global standards to empower stakeholder action, will go a long way in showing that sustainable blue finance can work. As I said earlier, in addition to hosting the Sustainable Blue Economy Finance Principles, we convene a community of practice of more than 70 pioneering institutions. Last year, we launched market-first guidance for financial institutions called Turning the Tide, and this practical resource recommends how to approach environmental and social considerations across shipping, seafood, marine renewable energy, ports, and coastal tourism. Since then, we've seen some successes working with our members on implementation and are today launching a portfolio of case studies on our website showcasing this process, which is contributing to building this crucial track record of ocean finance projects. This website is now live and freely accessible to everyone, so please do have a read through them if you're interested. In addition to that, we have a set of brilliant speakers today who will share an overview of their journey using the Sustainable Blue Economy Finance Principles and associated guidance via 4 brief interventions. Please welcome with me Fleur Parkinson, Asia Regional Manager, ESG Manager at Climate Fund Managers, Alba Bataracci, Head of Corporate Sustainability at HSBC, Vemund Olsen, Senior Analyst for Sustainable Investments at Storebrand, and Jean Zanutini, President at Neoline. Closing this quick round of sharing practical examples of how Blue Finance projects can work in practice, we have Lucy Holmes, Senior Program Manager in Seafood Finance at WWF, who has been directly involved in some of the work with financial institutions over the last year. She will share her views on the process, which will then lead directly into the interactive part of this session. And we do want this workshop to do its name justice by trying to answer as many audience questions as possible. So please get your questions for the panelists in via the chat function in YouTube as early as you can. And we're looking forward to hearing from you. Let's start with Fleur, and I will just bring up the slides and would hand the floor to Fleur. Fleur, please go ahead.
Hey, Dennis. Climate Fund Managers is an investment manager contributing towards mitigating and building resilience to climate change in Africa, Asia, and Latin America. I'm speaking to you today from our regional office in Singapore. Climate Fund Managers provided development funding and construction equity finance over the last 3 to 4 years to 2 wind projects, which are located in the South Vic Rim province in Vietnam. Each project has a transmission line, which crosses rice paddy and aquaculture ponds in the Mekong Delta. One project has 12 turbines and the other has 18 turbines in the nearshore area. The Mekong Delta is a productive and diverse river system, which supports considerable biodiversity. As areas designated as important bird and biodiversity areas. As a result of climate change, such as sea level rise, coastal erosion, and saltwater intrusion, and human factors such as clearing of mangroves, draining and conversion of land for farming, biodiversity and resilience of the Mekong Delta is deteriorating. Protection of the Mekong Delta is a key priority for Vietnam. Therefore, a key challenge of our projects was that we were developing in areas where there were sensitivities related to birds, bats, and marine animals. In particular, to 2 migratory shorebird species which are endangered, and potentially the critically endangered Irrawaddy dolphin. Fishing birds travel near the project areas to carry out fishing in the wider marine environment, and they also anchor near our project site in the evening, so there are different stakeholder considerations. There's also the challenge of management of potential pollution during construction and operation, and this was an enhanced challenge as we were building the projects in an emerging market. To address the challenges in relation to birds, a biodiversity action plan was prepared, which includes ongoing monitoring and other actions for the projects. It was also determined that bats may be present in the project areas, and the projects commissioned the first known nearshore bat survey in Southeast Asia. This survey provided data to demonstrate there are no large bats, such as flying foxes, used in the nearshore area, and the results of the survey will also help to provide knowledge regarding local bat populations. To monitor the presence of marine animals, such as dolphins, which could potentially travel near the project area, particularly during construction, passive acoustic monitoring was carried out before and during piling works. Also, local fishers were trained and employed as marine mammal observers to look out for and record any sightings. Next slide, thank you. CFM became signatory to the principles in late 2020, and although not designed to be applied retrospectively, the principles allowed CFM to review the nearshore wind projects through a blue lens to measure the positive impact of the projects. The principles have been embedded into the ongoing management and mitigation of the potential impacts. In relation to protection, CFM wants to achieve a positive legacy through its investments. Although the impact assessments determine that the projects are unlikely to have an adverse impact on shorebird populations, the projects have committed to protect biodiversity and to achieve a net gain during a 20-year management period. The projects are designed to be impactful and are implementing a community development program to support the coastal communities living and working in the area. The projects are working with SMV Netherlands Development Organization, and the program seeks to promote gender equality and social inclusion through its interventions, which will promote women's economic empowerment and the development of value chains and prioritize marginalized Khmer communities and households. The projects comply with relevant legal requirements for environmental and social protection, and they're also required to comply with CFM's requirements for adopting good international industry practices related to sustainability, for example, as set out in our IFC performance standards. An ESHA was undertaken, that's an environmental social impact assessment, and that was carried out in accordance with the IFC performance standards, referring to scientific methodologies and data collection. And these continue to be undertaken during the ongoing monitoring, particularly with regards to birds, bats, and mammals, and marine mammals. And this information and data informs CFM's investment decision, as the decision was based on an understanding of the risks and impacts. And with the support and facilitation of CFM, the projects have an ongoing partnership with BirdLife International in relation to the migratory bird species and important bird and biodiversity areas in the Mekong Delta. The knowledge and data collected through this program will help strengthen our collective understanding. Going forwards, and as we are doing on our current Blue Finance project, CFM intends to build the principles and indicators into each stage of the product life cycle, which will facilitate an integrated approach on protecting the blue economy alongside achieving other objectives.
Thanks very much, Fleur, for sharing your experience on this in this really fast-growing area of offshore wind generation. The next intervention will come from Alpha. Alpha, the floor is yours.
Assuming you can all hear me now. Thanks, Dennis. So I will be talking about Blue Bonds for Nature, which is a project that we're running in Australia and funded in partnership with the Nature Conservancy. By way of some background, many of you will be very familiar with HSBC. In October of 2020, we made our net zero commitments, and within our net zero commitments, we really understand the role that nature has to play in aiding that transition to a low carbon economy. I think it's also incredibly important that we recognize the fact that half of the world's economy depends on nature, but there continues to be a significant gap in investment and the capital flow that is going towards nature-based solutions and helping to bridge that climate-nature nexus. What Blue Bonds for Nature builds on is a research project that we carried out in Australia with the Nature Conservancy called Mapping Ocean Wealth, which aimed to quantify the economic value of marine ecosystems using the southeast seaboard of Australia as sort of the template. It became very clear quite early on in that piece of work that the data that we were collecting and the environmental economic accounting that we were collecting could create a very solid case for investment and create sort of new financial mechanisms. Where this project has sort of since gone is off the back of the research report. It was used to create a couple of business cases to demonstrate how investments in blue coastal economies and coastal ecosystems can deliver significant impact both for investors and for the environment in terms of climate mitigation, blue carbon outcomes, and the co-benefits that come from investing in nature. What Blue Bonds for Nature aims to do is basically build that framework. We're using the mid-north coast of New South Wales. And I think in terms of how we could demonstrate alignment with the guidance, it is incredibly, incredibly collaborative. We're working very closely with local communities. We're working very closely with local government and state government. It's absolutely embedded in scientific methodologies and data. And the aim is to deliver increased restoration, protection, and preservation of these coastal ecosystems, but taking a revenue-based approach. So using the information that we're collecting to identify the different revenue streams around which we could potentially build a blue impact bond or a green bond sort of use of proceeds type arrangement for the work that needs to be carried out. I think it's also incredibly important that in the quantification of co-benefits, we're also looking very closely at what the long-term impact of that is. So what that means for livelihoods and primary industries. We're working on a similar piece of work to build a similar sort of investment framework for mangroves in Queensland. And a really interesting finding from some of the work that we've done to date is that 75% of all commercial and recreational fishing catch in the state of Queensland has a connection back to mangroves. So when you start to sort of use that information to build out an investment framework, you start to understand how far reaching and long term that impact can be. I think the other thing that's incredibly important is we're building the framework in consultation with investors and capital markets. We understand the role that the insurance industry has to play in terms of potentially helping to de-risk some of the issuances in this space, but also the role that it has to play as a facilitator of capital flow, which of course aids scalability, which is where we want to get to. We want to build frameworks that can be easily scaled and replicated in other parts of the world. So that's what we're working on. That's the challenge. I'm hoping that in the next couple of years we'll have a really great demonstrable implementation of this solution. Thanks, Dennis.
Thanks very much, Alpa. It's super exciting to hear about this work, which really combines the new buzzword of blue bonds, but also really looking at nature and marine ecosystems, which is certainly something quite innovative. The next intervention will come from Storebrand. So, Vemund, the floor is yours.
Thank you, Dennis. Thank you for having me on the show, as they say. I'll be presenting today on a pilot reporting framework on nature risk that we've been working on with a multi-stakeholder group of partners, Storebrand Asset Management, which I represent, Grieg Seafood, which is a leading Norwegian salmon farmer with operations in Norway as well as Canada, the Norwegian Institute for Nature Research, as well as the World Wildlife Fund for Nature. And the background here is that, as asset managers, we are exposed to financial risks arising from degradation of nature. We need information about how the companies that we invest in are impacting on nature, as well as how they are dependent on the services provided by nature. But there is a current lack of quality data and corporate reporting on nature risk. And there are a number of great initiatives trying to address that, most notably the task force on nature-related financial disclosures, which is currently working. But we wanted to do a pilot project to see how we could sort of get a head start and progress, and to in the specific context of aquaculture, where we have significant investments. So together with this group that I just mentioned, we assessed various different existing frameworks. We landed on the aquaculture criteria from the Sustainable Blue Economy Finance Initiative, and the criteria in the Turning the Tide Annex. And then we assessed, we modified some of the criteria to be, increase the relevance to this particular economic sector. Obviously, the context for a Norwegian salmon farmer is different from a shrimp farmer in Thailand, for instance, in terms of regulatory framework, etc. And then we tried to create metrics that the company could report against. So then Grieg Seafood proceeded to report. We went back and forth a couple of times, providing further input and modifications to the framework. And then after that was finished, all the different stakeholders sort of wrote up a summary of our experiences and the benefits and challenges that we found in the reporting exercise. And I think that, you know, the main finding is that companies can already today provide meaningful data on nature risks, impacts, and dependencies. There's no need to wait for a perfect global framework to be in place. This may have to, you know, use or look different for different economic sectors. But we think that the UNEP-FI guidance is a very good starting point for companies in the aquaculture sector, and presumably also for other sectors of the ocean economy. The company Grieg Seafood reported that it became much more aware of its dependencies on nature throughout this exercise, and, you know, started looking at opportunities to gather more data and integrate this increased awareness on dependencies into their management. Some challenges that we identified is that you know, the data is mostly qualitative, which is great for detailed engagement with the companies, but more challenging when you want to, for an asset manager like us, you know, assess hundreds of different companies in a portfolio against each other and in a quantitative way. So you know, we need both approaches, but we need to do more work on selecting some standardized and quantitative indicators for aggregation at portfolio level. Another challenge is that a number of the indicators are, you know, really need verification by third parties. Like, for instance, does the company have an escape plan in place? You know, the company may say yes to that, but for a non-expert like me, it's hard to know whether that escape plan would be best practice. So in some cases, you would still need like third-party verification to assess the quality of the corporate policies in place. And we also found some issues about, you know, about definitions. They need to be standardized, quality assured. Do we all mean the same thing when we say, for instance, nature-based solutions in the context of aquaculture, for instance? So that's something that we need to work more on. But we believe this has been a very useful exercise. I think it's been useful for us. I hope it has been useful for the company, and we hope to recommend this to other companies where we invest within the aquaculture sector, to be able to compare companies against each other and contribute to this increased awareness on impacts and dependencies on nature. And hopefully it will also be useful for the development of the TNFD guidance, where Grieg Seafood is one of the members of the task force. And maybe it will be useful for some of the audience as well. We'll be publishing the report, both the sort of assessment report as well as the actual reporting framework on, it was supposed to be published today. It's still under a final revision, but that'll probably happen tomorrow or next week, and we'll publish the link on the case study site of the UNEP-FI. So you can all access it there or contact me directly. Thank you.
Thanks very much, Wim. Yes, I'm very much looking forward to seeing that case study in the flesh as well. And I think your presentation is a perfect segue to the last intervention from Jean, because he's coming from the other side, the company side, rather than the financial institution side. So, Jean, the floor is yours.
Yes, thank you, Dennis. Thank you all for letting me giving our feedback on our project. So we are holding a project to start a new shipping line from France to the US, only operating ro-ro sailing cargo vessels. So rolling in, rolling out sailing cargo vessels. These vessels will be 136 meters length and capable to carry about 5,000 tons of cargo, by reducing about 80% of fuel consumption. So we do this by reducing the speed, as well as using very large rigging and extensively using routing, weather routing systems, which allows us on the transatlantic route to achieve this kind of reduction. This project is should start the building of the first vessel this year, and so she will start entering service late 2024. And the objective of this project is to combine a technological but also operational approach in order to really achieve very ambitious amount of reduction. And in fact, we very often look very hardly on the technological and not really much on the operational side of things. So we chose a position as a ship owner in order to be able to really map the route and build up the discourse towards the cargo shippers and really look with the cargo shippers, which are the real point of the service that they have, that it has to be on the highest level, and which point of the service we can change in order to find room to reduce largely the impacts. So, of course, we are completely, I think, aligned with the sustainability principles because this first vessel will already make a big jump toward zero emission, and we have a plan to continue the job to really get very close to a real net zero. We also are trying to address a lot of negative externalities because by using wind directly on the vessel, we do not need power plants to produce e-fuels, or we do not need also a change in the ship and the harbor because it's a smaller vessel. We're also trying to work with close cargo shippers from our harbor so we can reduce the truck haulages. And this is a side, an upside of the fact to having a small vessel. You can go to closest harbors. You do not need to go to large hubs, so you reduce the interland range that you are looking for truck haulages. And ecosystems also will see some improvements because we will have much less, about 5 times less fuel on board these vessels, and so reduce of marine pollution risks. And we also reduce a lot of underwater noise because we have very small engines on board. So all of this is currently aligned, and we are trying to achieve long-term partnership with all stakeholders and mainly also with clients, because we need and they need all some view toward the future. And we are trying also to make our vessel as much as possible in the territorial in France where we are. So about 65% of the shipbuilding should be done in our region near Nantes. And so, of course, we've met a lot of challenges in this project. And the first one was that we need to load the vessel before being able to finance it. Of course, we must prove that the operation of the vessel will be profitable. So we succeeded to have contracts with long-term contracts with cargo shippers in order to cover all the costs of the vessel and to only remain a few improvements to be done during the shipbuilding. We also had a challenge regarding the assets value because the bank we are talking with have difficulties to assess the value of the asset, and because of course there is no yet ro-ro sailing cargo vessel existing, so we had to find other ways to give proper guarantees to banks, and of course the institutional is very key partner. So we are talking with the European Investment Bank, but we're also talking with French government guarantees, and we succeeded to obtain the relevant support in order to convince the bank to go in. We also have new risks, which is difficult to assess, and the biggest risk is related to sailing performance, because we have performed quite extensive studies, but they are still theoretical. So there is as innovation still a risk we must provision in the finance. And the biggest point, I think, is that our vessel proposed a new compromise regarding productivity, because the vessel is quite more expensive. It's also slower, so it's a reduction, in fact, on productivity. So we really have to change the mindset of the private stakeholders in order to be able to accept to invest more than 60 million euro in an asset which is less predictable than the previous generation. And I think this is a whole point which connects to a lot of projects in the decarbonation sector. Thank you very much.
Thanks very much, Jean, for your intervention. And as I said, it's great to hear also from the other side of the story from the not from the financial institution, but the corporate side. And I think this example of using wind energy, kind of going back to the roots to address some of the challenges that the global shipping industry has nowadays is certainly very, very innovative. I'm going to stop sharing my screen, and would like to hand over to Lucy Holmes, who's been part of the whole process on our side over the last year to work with financial institutions to create some of these example case studies. Yeah, Lucy, happy for you to share some thoughts on this as well.
Thanks so much, Dennis. Assume you can all hear me. Thank you. Yeah, thank you so much. This has been really fascinating to be a part of this planning for this event in terms of really trying to get concrete examples of how the principles and the guidance have been used over the past year since it was launched, I think just under a year ago. And great to hear how much they have actually been used. And of course, these are 4 case studies, but I think on the website there's a couple more, and I assume we hope that there will be many more over time. So I just wanted to share a couple of takeaways I had from the presentations, and then some additional information from the work we've been doing specifically within the seafood finance working group, which has been running since more or less the launch of the guidance, or just after, to actually really try and work together as a group of practitioners from finance and non-finance actors to understand more about how to implement them, and sharing ideas and thoughts and opportunities. But I'll come back to that. So I just wanted to make a few sort of comments on what I heard here. So I think the first thing is just the idea that it seems like the guidance, the principles have been very versatile. So we've heard how they've been used not just across sectors in terms of offshore wind, seafood, shipping, etc., nature-based solutions, but also across markets. And I think that's something that's really actually very heartening, in the sense that they can apply both in Vietnam, for example, and in Norway, very different markets. And that was something we really wanted to get feedback on. So I think that's something to note. And then it's great to hear that how the guidance is being used, or how the principles are being used as well in different ways. So in terms of project planning, for example, we've heard both from CFM in Vietnam and Nearliner building projects to actually really try and bake in these type of ESG nature risks and dependencies from the beginning, or retrospectively, into the projects, in order to make sure that they're streamlined and minimizing both impacts and risks to project developers, but also to the financial sector who are investing in them. And I think in all the examples we really heard about how, even in sector specific examples, for example, like the offshore wind one, that actually there was a blue economy approach that was being used. So not just looking at the specific sector, but the impact on aquaculture, fishing, tourism, etc., in the different areas. So that I felt was exactly, I think as we would like to see things. So project planning, and then obviously designing financial instruments as well, from the example from HSBC, in terms of really looking at how to use the guidance and the principles to not just design the projects, but also integrate them into the actual financial instrument, whether that's a bond or other. And that's another use that we've heard of in the working group I mentioned as well, in terms of how to use the guidance in things like sustainability-linked loans and other instruments. And then, of course, on Storebrand's example on reporting, I think there's a lot here to take away in terms of taking the framework and trying to adapt it to a specific case, in terms of really working very closely with one of the portfolio companies to actually see how it works for reporting. And of course, we know reporting is only going to increase, and so I think it's very helpful to have an example of how that can work in practice and be built upon. And I think the idea of data and having access to data, both qualitative and quantitative, is obviously a challenge that we're all looking at, and that data can be verified. So that's something that I think is going to be a topic for future conversation. So those are some of my takeaways. So versatility and the way it's being used across different markets and different types of usage, I think, is really really clear and great to hear. So in the working group that we've been running for around 6-7 months now, a couple of other things I wanted to share that have come up there. Of course, predominantly these working groups are around capacity building and awareness of the detail that's in the guidance. We know it's quite detailed, and in each criteria there's a lot to know and understand. And so we've focused quite a bit on going into individual criteria, for example, IUU or traceability, to really expand that and understand what tools exist, how can we use their verification sources to see whether there is the presence of the particular indicator and what some of the solutions are. So that's really been the focus, and we know that financial institutions need that support to really understand these sectors in detail, particularly where they're not experts themselves. Then we've also talked a little bit around how the guidance has been used for. We've heard about how the guidance has been used for sort of active engagement. So Viman mentioned this in terms of engaging with companies, but also we've heard from other asset managers and investors that it's a very helpful framework to know what the key issues are that a broad swathe of experts have said these are the biggest risks and impacts in this sector. And therefore, we can really align our engagement with these companies along those lines. That for me is something that we need to be doing much more of, and I think there's I'll come back to that point in a minute around alignment. We've also heard about using the guidance to sort of sense check existing policies that banks or investors or insurers might have to make sure that they're in line with the kind of latest guidance. And we've also heard about how it's being used in due diligence / risk assessments, and building impact frameworks, for example. So actually really trying to make sure that when we're measuring impact or whether we're looking at risk, we're kind of aligned with, again, sort of best practice. And then I think that also links to another case study that's online around using the guidance to highlight opportunities as well, not just risks. So, there is within the guidance and the principles, obviously, very much the idea of looking to the future in terms of what are the financial opportunities that are going to meet the demands of a sustainable future, the SDGs, the principles, and having the guidance to help point signpost towards some of those, I think, is something that's been mentioned as well. So I think maybe just to end on what it feels like we want to see more of, and where there's maybe some momentum around. I mentioned this word alignment. I think that plays into a number of different areas. So I think we see the guidance as being really helpful to create alignment with other initiatives. So the TNFD was mentioned, for example. We know that there's the taxonomy work. Other principles, IFC was mentioned. So yeah, I think continuing to make those alignments and those synergies, it will be critical for this to continue to be useful. Alignment across portfolios. So as Viman said, not just one company, but many companies. How can we look across portfolios and within financial markets? I mean, really the whole point is to be able to align, a critical mass of capital providers towards the same outcomes, and that would be, that's going to be really important. And then, similarly within financial instruments, so using similar criteria for blue bonds, for sustainability linked loans, SDG bonds, etc., that continue to send the same signal over and over again, I think will be really important. I think there's a lot coming around reporting and metrics and targets and how we design those. And I think the guidance doesn't have metrics or targets in it right now, but that is something that we could build on if there's appetite. And I think, lastly, maybe just to say, just more action. Just want more of these examples. More, we really want to know more about how the guidance is being used. So really hope that you guys can share today from the audience, but also really start to get a much bigger dialogue going about how this is being used and how we can help facilitate that. I will stop there so we can hopefully have some time for questions. Thank you.
Thanks very much, Lucy, and very much echo your call to action. We do want to make sure that the guidance is used practically. We want this to be from the start a usable and useful tool for financial institutions. So it's great to see these first examples of implementation of our panelists. And again, we have a couple more case studies on our website. Feel free to check these out. And we do see the guidance as well as our website with case study examples as a living and breathing resource for the wider financial community. So if you have any case studies to share, please do so. We expect to add further examples, practical examples across the blue economy space going forward. So feel free to check in regularly if you're so inclined. And I know that we have not all that much time left, but I do want to make sure that we take at least some questions from the audience. For our panelists to make sure that we use the combined excellence and brilliant minds that we have on the line today. And maybe I'll start with one of the buzzwords of last year, again this year, is around blue bonds and blue loans. And I'd like to ask Alpa maybe to elaborate a bit more on the mangrove project and the application of the blue bonds there. And I think from the audience there also came a question around blue loans. Do these exist? Do you have any examples of that? And if so, how are these structured and what is kind of the analysis that goes into them?
Thanks, Dennis. So let's talk first about the blue bonds and the blue loans. In the sense of a pure nature-based solution where the capital is being raised through mainstream capital market investors, they don't necessarily exist at scale. We have seen blue bonds issued in Belize, as you mentioned in the opening, and similarly in the Seychelles. Yes, they are blue bonds, but they actually function as sort of debt for nature swaps, where you're basically converting sovereign debt to provide protection for those coastal ecosystems, which has significant impact from both the climate change and a primary industry and local community perspective. We have seen issuances labeled as blue bonds, but they haven't necessarily been nature-based solutions. There have been considerations within a bond structure around wastewater, for example, as part of a broader environmental footprint. We've also seen similar considerations in supply chain financing, how best to manage impact on those water resources, but not necessarily the investment at scale that we're looking to address. I think in terms of whether it's a blue loan or a blue bond or a sustainability linked loan or bond, yes, there is that real urgency to scale up investments in coastal ecosystems and the significant co-benefits that they deliver. But looking at the example from Vimend and Storebrand, where they're looking at the guidance for risk, for example, for aquaculture and the reporting, it's sort of how could we potentially work with someone like Storebrand, help them meet some of their financing requirements by putting in place a sustainability linked structure that incentivizes improved outcomes within an aquaculture space, that again, clearly quantifies what those co-benefits are, and potential and incentivizes that through what we normally see is a discounted application of finance in those arrangements. And for someone like Storebrand, potentially there could be carbon credits to be realized as well, that they could potentially offtake to meet some of their own offset requirement. And in a perfect world, that is how that financing could potentially work from a supply chain perspective too, beyond sort of just your bond and loan markets that are largely driven to date through government intervention and appetite. The mangrove bond. So we're working with an organization called Earth Security. They have run a piece of research for the HSBC Center for Sustainable Finance looking at mangroves as a nature-based solution. And there is already precedent of investment at a sort of municipal, so that sub-state government level, to invest in coastal ecosystems and mangroves. And we've seen that through the Miami Forever Bond, and sort of suggesting a similar model to provide investment for mangroves, and recognizing that there are many cities around the world with significant mangrove stocks. um, in particular, Brisbane, which is in the state of Queensland, which is where we're focusing, and the role that those mangroves play within those cities, not just from primary industries and potential for carbon, but what they mean for resilience. I mean, if anyone is familiar with the flooding that we had in Queensland not that long ago, and the devastation that occurred as a result of that, and you thought that was bad, realistically, that our mangrove stocks in Queensland are in pretty good condition. And if they weren't in that condition, I think that devastation and destruction would have been far, far greater. But what we also need to understand is, insurance premiums in the state of Queensland are going up exponentially higher than other parts of Australia. So it's, how do we take this incredibly important coastal ecosystem and really map out all the benefits that they provide to our society? How do you monetize that and build that in to an investable vehicle, so that we're not looking at regeneration or restoration in drips or drabs? We have that funding up front to create the healthiest ecosystem that we possibly can, that is working to the best of its capability to address the adaptation and mitigation requirements that are needed as a result of climate change.
Thanks very much, Alpa. I do hope that answered the question. Certainly on my end, I'm very happy to hear about all the background thinking that goes into these very, very innovative projects. I think we have to acknowledge that fact that this is really, really new for everyone involved, and it's great to see that also the collaboration that you've created with Earth Security, and also the local government and municipality, which I think is also crucial. I have one more follow-on question, very, very briefly for you, which is around blue bonds. And you did develop your own framework, is that right? Do correct me if I'm wrong. And the question is, why did you do that? And are currently existing frameworks like the green bond framework, for example, are they not sufficient for blue bonds, do you think?
So we're in the process of delivering the frameworks for both the blue impact bond for nature and the mangrove bond. I think the challenge a little bit in this space is that the answer to some of these questions is still bespoke to an extent. Um, and while the frameworks will likely borrow quite heavily from sustainability and impact bonds and green bonds, um, and we are being structure agnostic at this stage, but the end result will likely borrow from all of those different frameworks. What they don't necessarily take into consideration at this stage is the level of, the environmental economic accounting that we need to factor in. And using sort of the risk factors that may exist, particularly where you're looking at existing carbon stock, what happens in the event of an extreme weather event. So those sort of things you actually need to tailor make the frameworks to a certain extent, especially this early on in the game. The hope and the reason why we're building these frameworks is whatever we come up with at the end will be publicly available. We're not holding it to ourselves as IP because we want it to be used. We want it to be used as a demonstration, as a template that can be taken to scale and replicate. So that's why we're building them.
Super. Thanks very much, Alpa. Moving on to Fleur, we have a slightly maybe more technical question around following on from what Alpa just mentioned. There are additional social and environmental impact measures that you need to take into account. And on your side, do these result in additional costs to the projects? And if so, how were they priced in?
So unfortunately, to probably the investment team, these environmental and social actions and impact measures, they do come with an associated cost. For the monitoring, for the mitigation, for the management, for oversight, for resources on site, they're all associated with a cost. So they're built in alongside other project costs into the financial model, and considered alongside the construction budget and the operation budget. For the community development part, that is it's part of CFM's own. We have our own structure and how that's built in, but we have a ring-fence budget that's set for community development during our development phase and construction phase. And then during operations, it's linked to the project performance as well. So those costs are all considered in the project development.
Thanks very much. I would like to move next to Raymond. You talked about how you engaged with the company on the ground, so to speak. In addition to that, did the guidance, the Turning to Tide guidance recommendations and the principles change in any way your evaluation of new investments? And if so, could you explain in what way that has happened or maybe will happen in the future?
Sure, thank you. I think it's fair to say that so far we've used the guidance mostly for risk analysis and engagement with particular sectors where we have exposure and sort of a strategic decision to try to contribute to changes in the real economy. We've had a series of meetings now with shipping companies, for instance, in which we discussed climate and biodiversity issues. So I'm very excited to see Jean's presentation of sailing technology. So I think it's very useful for that. In terms of integrating it into new investment decisions, our aim is to integrate nature risk and specifically for ocean sectors more systematically in the future. I think that the point I raised about the qualitative versus quantitative data presents some challenges in terms of like providing our portfolio managers with specific data points where they want to be able to compare thousands of companies against each other. So currently, I think it's more relevant for the actively managed funds where there is an active sort of investment decisions in terms of looking at specific sectors, we provide our portfolio managers with sort of our recommendations for specific sectors covered by the Turning the Tide guidance. But for the passive funds, I think that this kind of data is less relevant for our managers. So that's part of what we also try to address with this pilot project, is to see how can we adapt this to make it more relevant for managers that don't necessarily go into the same amount of details as us in the sustainability and risk team would do.
Thanks for that, Fem, and thanks for that insight. May I just also add on to that? So you talked about engagement specifically. May I ask what the timeline for that is on your end? So how long did that process take together with with the company specifically in this context? And how replicable do you think will that be going forward? This kind of method of engaging individual companies on this topic.
Are you referring specifically to the process of creating this pilot framework, or our general engagement with companies in the ocean sector?
I think maybe both. So first of all, how long did it take you to develop this framework that you spoke about earlier? And in general, how long does engagement take for an organization like Storebrand, or what extent does that take?
Well, in terms of developing the framework, that took longer than it should have. I think we spent the best part of a year, but that's because everyone's busy, and so that could. The actual reporting, once we had the framework sort of ready and modified, didn't really take more than a month. In terms of our engagement with different sort of ocean-based sectors, we've done a lot of it with the aquaculture sector, with shipping. And that's an ongoing process. That's a continual sort of dialogue. We would select a sector to engage specifically on and compare companies against each other, and so that's ongoing. Yeah, I would say.
Okay, that's good to know. So you think the kind of engagement process based on the guidance is relatively replicable going forward for you?
Yeah, certainly. Certainly, it provides us with very good input on to ask the right questions and to be able to assess, I guess, the replies from companies as well, and to have a more informed and constructive dialogue. And I think the companies really appreciate us asking not just quantitative data questions, but actually being showing an understanding of their business model and what the challenges would be. And as we've recently done with shipping companies, we've been, as Jean touched upon, a key issue that's arisen there, which is what are the actual clients' expectations to, or openness to, new technology like this? What will the cost sharing model be? What are the shipping companies saying about their clients in terms of reduced speed or reduced cargo capacity or higher prices? So our intention is to be able to help companies in these issues, and then we could also engage with clients of shipping companies, for instance, to increase their openness to accepting sort of low carbon technologies for shipping, which is important for us.
Thanks very much, Wim. Actually, that leads me to Jean. Jean, I assume this kind of more collaborative approach is also positive from your end. But I would like to ask you specifically around your view on any changes that you think need to come from the regulatory or policy side to increase private finance flowing into solutions like the one that you're offering.
Yes, I think that it's very interesting and very good to impregnate all the financial sector in new ways of analyzing project and how to implement new metrics in order to not only looking at the return on investment versus direct risks, but also looking on all the externalities. And that's the point. How do we really integrate in the analysis at the right level the externalities? Because the reality is that the most the best investment in terms of return on profit is to just make a lot of exploitation without caring for anything, and that's the how you have the best profit in 5 years. So you have to counteract this, and so the guidance is really help on this one, and I think it's very, very important. But I think we should not be blind to the long way we still have to go in order to really take into account at the right level the impact of our industries. And because you know, the thing is that we have to deliver now. We know that we will have to deliver the environment at the same level as we get it, or at a better level is possible. So we still have to make this compromise. I think the compromise on productivity is a very key point, which is very, very difficult to address, and is also very, very difficult to address with the private sector and industrial actors, which are from a long time looking for on a race on increasing productivity. And so I think that we really have to find this change in paradigm on this thing, and it's difficult in terms of guidances. I would hope that I think in the maritime sector we have something which has some pros and cons, but it's quite interesting in the IMO process, because the IMO process succeed to also put in force some regulations that really push the way on the whole sector. I think Vermund, you can also agree that when the IMO said that in 2050 we have to be 50% less carbon emission, it just make a big boom in the industry and really set a course very strongly. Nowadays, no shipping operator can completely ignore this question, because next to these objectives, there are just real regulations that put into force and constrains the actors, the industrial actors, to reduce little by little their impact toward an ambitious objective. And I do hope that we could put on other sectors of industry also this kind of very, of course, I would like that these objectives are more ambitious, but it's still very something which really push the sector and change the mindset also on the actors. So.
Thanks very much all for sharing these thoughts. Lucy, I'd like to finally jump to you and see if you have anything else to add on, specifically around regulatory needs and actions that might need to happen, and or some kind of key takeaways that you think would be crucial to share.
Yeah, thanks, Dennis. Yeah, very briefly, I think yeah, on the policy side, of course, the more there is, then the easier it is to create that sort of common ground and level playing field, as I say, to make this easier for both companies and financial institutions to integrate and report and mainstream and all the things that we need much more of, much faster. I think maybe a takeaway to summarize some of my points earlier would be, the case studies show this really great mix of both the risk management side and the opportunity seeking side. And I think, obviously we need more of both, but I wonder if there's actually an interesting connection that the principles and the guidance can play between those two sides, which is, I think Alpa was getting to this in her comments around, using the guidance and principles to identify the risks and then structuring opportunities around mitigating those risks. And I think that's where this alignment will start to flow more easily. But yeah, I'll leave it there. Thank you. Thank you so much, Dennis.
Thanks, Lucy. That's perfect to finish on, actually. I would like to really thank all the speakers for this great discussion. It's really crucial that those pioneering institutions that are already active in the sustainable blue economy share their experience across their peers to build this track record of real projects that can inspire others to follow suit. So I would encourage everyone in the audience to please read through the case studies on our website. Feel free to reach out to us if you have any that you would like to share. We're looking to build this site going forward with examples of projects as our members and other financial institutions implement the principles, of course. Just before jumping off, I also want to mention that we'll publish additional blue finance guidance focusing specifically on plastics and waste management, as well as coastal infrastructure and resilience. And this practical resource, which is going to be called Diving Deep Finance, Ocean Pollution and Coastal Resilience, will bring clear guidance on which financial activities to seek out, which to challenge and which to avoid completely across these sectors. And you'll be able to find this document as well as the list of recommended exclusions for free on our website from early March, so please watch this space. The question that we always get is, where can banks, insurers, and investors start their process and their journey in this space? And it's clear that we need to scale up action to mainstream holistic sustainability considerations that are based on science across ocean-linked sectors. So I encourage really everyone in the audience today to start evaluating their organization's impact on the marine environment and to show leadership on this topic of the sustainable blue economy and to share your experience with peers. Thank you very much for tuning in.